Welcome, everyone. This is the AbraCasaBra podcast, in which we will tell you everything you have to know about buying and selling a property in Andalucia in Spain. I am George, the personal AI assistant of AbraCasaBra, your host today. In this podcast, I'm going to explain how the Spanish banks are looking at your request for a mortgage, what is the procedure you will have to follow, and what information you will have to provide them. The first step is always evaluation of the property. The valuer will first look at the local market, the housing supply, the price level, the demand and market forecast. He or she will also analyze the condition of the building, and they will also take the location of the property into consideration. As we say, it is location, location, location. A mortgage can run until the age of 75 at the latest, depending on the bank. The mortgage amount and interest rate can also vary from bank to bank. Often the mortgage rate can be reduced by opening a bank account or taking one or more insurance policies in addition to the mortgage. The mortgage is always based on the lowest value, the bank's appraisal value, or the purchase price. The level of the mortgage can also vary depending on your residency. To non-residents, they will usually allow a loan of 60% to 70% of the lowest value given to the property, but up to 80% of the lowest value to tax residents. You are a tax resident for the bank if you can present a first income tax assessment in Spain. The bank always appraises the property at your expense and only from the moment the reservation contract is signed. After the appraisal, the bank makes a mortgage proposal. Remember, the amount of the mortgage is set at the lowest amount, so either the purchase price or the appraisal value. Important to know is that some banks will always try to estimate the property as low as possible. So, you often end up with only 40% of the amount you can borrow. Also know that you will have to prove the origin of your own funds. Did it come from a savings account, an inheritance, or the sale of your house, etc.? The banks are very strict on compliance and money laundering. An important notice as well: buying a house in Spain with a mortgage without your own contribution is not possible. Take into account that you will need at least 40% to 45% own money, so your own contribution. They will also look at your repayment capacity. The total net living costs, rent and mortgage, should not exceed 30% of your net income. The purchase costs has also to be paid by the buyer, as well as other eventual additional costs are not co-financed. Another important note: for properties in rural areas, you will rarely get a mortgage if the property is not fully regularized. And that is a problem, because a regularization can take up to 1 year and costs between 10,000 to 15,000 euros. Other things the bank will check: are you employed or on benefits? In that case, you have to submit the 2 or sometimes 3 last payslips. They will also ask you for an employer's statement, the type of employment contract, the number of years of service, your annual salary, and your position. You must also submit your tax return for the past calendar year. Are you self-employed? Then you must ask for a letter from your accountant, giving the details of your business, evidence of your turnover and business profits for the past 2 years, or sometimes 3 years. Also to submit the tax return and annual accounts for the past 2 years. Are you in a different situation? Then they will ask you for proof of other source of income, which could be your pension or a return on your portfolio, rental income, etc. A credit report, and bank statements for the last 6 months. Keep in mind that this entire procedure can take a month or 2, and that most property sellers here will not accept conditions precedent for obtaining a mortgage in the purchase contract. So that can sometimes lead to strange situations and a lot of stress. Moreover, the demand is now so high that a seller will choose the quickest payer. Conclusion: cash is king as usual. Inform yourself very well before committing to a purchase. Also consider whether it would not be best to partially rent the property you're buying over during several years so you can prove some extra income. But it really pays off. The quality of life you will enjoy here, combined with a smart purchase, still yields a lot more than a traditional savings account. A tip: it is often possible to get a loan much faster in your own country, with your own bank. The only condition is usually that you can pledge property there. Or if you have sufficient surplus value on your own home and income allows it, additional loans can be made. Building a good file is crucial, as banks have become much more difficult and cautious. You can also see this in the statistics. Around 20% fewer mortgage loans were granted this year. The quality of your loan application determines whether or not you will get a bank mortgage. You have to prepare yourself to become the perfect candidate for a mortgage. The bank will ask whether you are a good homeowner and whether they can trust you. By submitting a complete and well-founded application, you double your chances of getting the mortgage you want. Moreover, your bank loan application will then be processed as quickly as possible. Our advice: if possible, submit your loan application before you start looking for a property, not after. So apply for your mortgage first. Contrary to what you may think and to what some estate agents and even bankers say, it is best to prepare your bank loan application before you start looking for a property. Why should you do this? Because it will help you avoid unpleasant surprises. Do you know how much the bank can lend you? And most importantly, whether they can even give you a loan. And what will the monthly repayments be if so? Nowadays, many potential buyers start looking for a property without knowing the answer to these two essential questions. Put together your mortgage application before you start looking. Then you can get an agreement in principle on the amount of the loan. And you can proceed with your project in complete safety. In other words, do your research knowing that you can buy for a certain amount. You are not asking your banker for a firm loan offer, but for an agreement in principle on an amount, a term, an interest rate and terms. We always tend to overestimate our borrowing capacity. This can lead to situations we sometimes find difficult, if not impossible, to get out of. A real-life example. After a month of searching, a couple from Amsterdam found the house of their dreams, an 80 square meters flat on the Costa del Sol for €250,000. They paid €5,000 to reserve the property. Then they went to their Dutch banker, hoping to borrow €200,000 at an interest rate of 3.5%. The banker replied, "We do not provide loans for property investment in Spain." Then they went to another Dutch bank that does provide loans for purchases in Spain. Again, they were rejected because our couple had no property to take out a mortgage on, despite having a comfortable family income of €6,000 a month. In desperation, they turned to Spanish banks. They were told they could borrow a maximum of €160,000 at an interest rate of 4.5%. Having little time, or risking losing their reserve of €5,000 in their flat, they took out a loan for the difference of €40,000 from a credit organization, which gave them a loan at an interest rate of 7.5%. Without, of course, informing the Spanish bank, which could reverse its decision to grant the loan. In short, a waste of money and a headache. Another real-life example. A young single Belgian with a comfortable monthly income of €8,000 has found a beautiful house in Malaga for €290,000. He puts down €5,000 as a deposit. In the end, he finds no bank willing to give him a loan. Not in Belgium, because he has no house as collateral and little savings. Nor in Spain, because he already has loans outstanding for 2 cars and several consumer loans totaling €3,500 a month. He has lost his reserve of €5,000. He had not included a clause to get this reserve back if he did not get the loan. Time and money lost. So, follow our advice. Put together your mortgage application and go to the bankers before you start looking for a property. We say bankers because you should let the banks compete with each other. This costs you nothing and requires no extra work. The loan application is the same with all banks. Compare banks to get the best rate and credit terms. A loan commits you for a long period of time and has to be repaid, so check the terms carefully. In particular, the repayment terms, modularity of monthly payments and credit insurance. Also, don't forget about any early repayment penalties. Note that this advice applies to a home loan in any country. But not so many banks in our own country provide loans for property investment in Spain. Why not? Because they no longer make money from it and take risks with it. Therefore, if they do want to grant you a loan, they will ask you for collateral. Usually this is property located in your country. For example, a mortgage on your main residence or some other collateral. With this type of loan, you can get up to 90% of the purchase price of your house in Spain. Very rarely more, and usually over a maximum of 20 years, depending on your age. Also bear in mind that you still have to put down at least an extra between 19 and 23% for the mortgage charges and the missing 10% of the purchase price and taxes. Also know that whatever your nationality, Spanish banks make an important distinction between customers who do not live in Spain and those who do. The capital amount that can be borrowed for a home loan, the interest rate and the term of the bank loan differ depending on your situation. Loans in Spain are always linked to a mortgage. When buying a property in Spain, you must present the Spanish bank with proof of the origin of the funds used. For example, bank statements from the country of origin. Or did you receive an inheritance to complete the transaction? Or did the funds come from your savings account? This requirement is required by law to prevent money laundering. It is becoming harder and harder to get a loan to buy a house, and especially to buy a house in Spain. This is due to the more difficult financial situation in the world, resulting in banks tightening the thumbscrews. This episode first covers some general things to consider, and a few secret tricks to get your loan more smoothly. First of all, you should know that whatever your nationality, Spanish banks make an important distinction between customers who do not live in Spain and those who do. The capital amount that can be borrowed for a home loan, the interest rate and the duration of the bank loan differ depending on this situation. They will obviously lend residents more than non-residents. When buying a home in Spain, customers must present the Spanish bank with proof of the origin of the funds used, such as bank statements from their country of origin, to complete the transaction. This requirement is required by law to prevent money laundering. Also good to know, the bank may require the non-resident to have their documents translated into Spanish by an authorized translator. How exactly should you file to increase your chances of getting a loan? What we are about to tell you could well make the difference whether you get a loan or not. There are a number of things you need to do before you submit your loan application to the bank. It may take time, but it always pays off. First, clear your accounts. Your last 3 bank statements should be given to the bank as part of your loan application. In particular, they are used to calculate your debt capacity and how much you have left to live on. They are also used to determine whether you are a good manager. Certain behaviors, such as being in the red or consumer credit, are very unpopular and can prevent you from getting a mortgage. They signal to the banker that the person is struggling to manage their money. Your debt capacity should normally be limited to 33% of your net income. If you have other loans outstanding, they are included in the calculation of this percentage. So come clean and, if possible, pay off all your loans before submitting your loan application. This will increase your debt capacity. Bank debts give you a bad image. So plan ahead and avoid overdrafts 3 months before you inquire about your mortgage. Save your money. To support your bank loan inquiry, consolidate your savings. especially since you need the savings to make a personal contribution towards the purchase. Without savings or other financial resources at least equal to your down payment, there is no point in thinking about buying anything. And remember that this down payment can range from a minimum of 10 to 30 to 40% of the property's value. For example, for new construction, this can quickly go up to 30 to 40%. By building up savings well in advance of your planned purchase, you can significantly improve your loan application for a number of reasons. First, the bank is then reassured about your ability to save. Even if you have a high income but have never saved regularly, the amount you have left to live on will drop dramatically. This jump in cost will scare the bank, and they will rightly wonder if you will be able to change your lifestyle. Besides, if you have a lot of savings, this helps reduce the bank's risk of default. Your money can be used to pay your monthly repayments. If you borrow from a bank where you have not been a customer before, the bank will also hope to sell you savings products, insurance, or other financial products. For banks, a mortgage is a great way to attract new customers in the long run. A permanent contract is better than a fixed-term contract. If you have a fixed-term contract, and you know you will be offered a permanent contract in a few months, wait a few months before inquiring about a loan. Bankers are more likely to lend to permanent contracts than fixed-term contracts. Self-employed entrepreneurs, temporary workers, auto entrepreneurs, self-employed people, and even pensioners are also regularly successful in getting a mortgage. The important thing is to prove to the bank that you have a regular income. If part of your income is variable, the bank will average it over the last 3 years. Age matters. It is easier to borrow at 30 than at 60 with the same file. A banker will lend 25 years to a 30-year-old, but only 10 years to a 60-year-old. And among 60-year-olds, banks are more likely to lend money to someone in good health than to someone with health problems. So if you are elderly, show your banker that you are in good shape. Be patient. Pay off consumer loans. Make sure you are not in overdraft. Save heavily. Change your status. In the end, it all takes time, sometimes 6 months, sometimes much longer. But that is the price you have to pay to get your loan application accepted at a satisfactory level. Some clients have managed to increase their debt capacity by 50% using these methods. Required documents for a loan inquiry. If there are multiple co-borrowers, the inquiry should include documents relating to all those taking out the loan. To apply for a mortgage, you need to prove your identity, income, and current expenses, such as rent or outstanding loans. Personal documents. The personal supporting documents, which are the first requirement for a mortgage loan, are the NIE number. An identification number for foreigners is a requirement for all foreigners who want to buy in Spain. Bear in mind that it can take up to 2 months to obtain this number. Proof of identity, such as an identity card or passport. Proof of marital status, such as a family or marriage certificate or PACS certificate if you are borrowing as a couple. Marital property regime and marriage contract if applicable. Proof of address less than 3 months old, such as rent receipt, electricity, water or telephone bill. Proof of housing, and so on. Documents relating to your income and expenses. The second requirement for getting a mortgage is to provide proof of your income and any expenses you have to pay. An employment contract and the last 3 pay slips if you are an employee. The last 3 proofs of pension payment if you are retired. The last 3 balance sheets if you are self-employed, such as liberal professions, shopkeepers, artisans, or farmers. Articles of Association and K-bis in France, BCE in Belgium, or extract from the commercial register in Switzerland if you are self-employed. Bank statements for the last 3 months or 6 months, depending on the bank. 2 or 3 most recent tax returns. Proof and documentation of all outstanding loans, in particular repayment schedules. Any documents showing that you have income from property. title deeds of your own property and that of a non-trading company, and repayment schedules for loans linked to these properties. Proof of own contribution. Other information and documents. If you have a property portfolio, present it. It may be less creditworthy, but it will improve your loan application. If you take out a bank loan outside Spain, it will be essential in your home country to establish the mortgage for the loan you need to buy the property. Do not hesitate to attach other documents to your mortgage application that can highlight your financial reliability. The point is to convince the bank that you have the financial capacity to take out a loan. Don't try to hide anything from your banker. They will eventually find out, and this will have a very negative impact on your loan application. Admit your weaknesses to your banker, but emphasize your strengths. The goal is to prove to the bank that you are not at risk of defaulting. Information about your plans. Set out in a few lines what your plans are for buying a house in Spain. The more you show that you know what you want and that you know the market, the better impression your inquiry will leave. It is that little extra that can tip things in the right direction if the banker hesitates. Prepare a financing plan. The icing on the cake. To convince the banker once and for all, prepare a financing plan. This involves preparing a simplified budget. This lists your estimated monthly income and expenses for the next few years, plus the monthly mortgage repayments. By preparing a financing plan for your bank loan, you can also estimate whether you can afford the repayment of your loan in the coming years. Show this preliminary budget to your banker. It will be appreciated. This will increase your chances of getting your bank loan. Go to several bankers to get them to compete with each other and to have a fallback solution if one of them pulls out. You will find that they are usually pleasantly surprised by your early approach. Some will insist that you come back when you have found your home. Tell them you are only here for a quick look at your property. You should be able to make an informed decision on your project, get an agreement in principle, and find out the maximum amount and terms of the mortgage the bank might give you. A knowledgeable banker should be able to give you an initial assessment in less than 30 minutes. During the interview, you should show original documents. You should leave a file of copies of these documents once the banker has been able to check the originals. It is easier to do this on a USB stick than on paper. Compare bank offers to get the best rate and credit terms. Credit is an obligation and must be repaid. So make sure you check the terms of the loan. In other words, repayment terms, modularity of monthly repayments, credit insurance, any early repayment penalties, and so on. You have an agreement in principle from one or more banks. You are then ready to start looking for your property in Spain, or you can contact a property consultant who can do this for you and help you with your purchase up to the final sales contract. Hey can also help you put together your banking documents. Have you found your property? Ask for a binding offer. Keep in mind that the banker's agreement in principle is not a contractual document. After your own research or that of your property consultant, you have found a property that matches your budget and the amount the bank wanted to lend you during negotiations. You have signed a reservation contract or a provisional sales agreement, after inspecting the property, of course. You need to update your original inquiry. In particular, your personal documents, income and expenses on the date of the meeting, and come back with all the original documents and the updated copies on the USB stick. Also include documents related to the property plans. Note simple of the chosen property. Reservation contract or compromise d'event or promesse d'event signed. Then everything should go smoothly. I hope you enjoyed our podcast. You will hear us back soon with new exciting topics, everything you need to know to optimally buy or sell a property here in beautiful Spain. If you have any specific questions, don't hesitate to send us an email at olivier@AbraCasaBra.es. And be sure to follow us on our social media. Till soon.